When I first began in this game, the hardest thing for me to learn was this: the market doesn't care what I think. The tape doesn't care if I believe a stock is cheap or if I think it's due to rise. My opinion isn't worth a dime compared to the verdict of the market. That's a truth most traders never accept. They think they can argue with price, and what happens to a man who argues with price? He ends up broke. Do you see the sense in that? You can make 1,000 trades and get nowhere if you don't understand one simple law. Cut your losses short and let your profits run. I didn't invent that line. The market taught it to me with a whip in its hand after I'd been too stubborn to obey. You cut your losses short because a small loss is the best loss you'll ever take. It's tuition paid to the market for the right to keep trading tomorrow. But you let your profits run, because the big money, the only money that really counts, is made by sitting, not by fidgeting. Ever notice how a stock that starts moving in your favor often keeps on moving? Do you grab it too early, afraid to lose what you already made? That's the ordinary mistake, taking small profits quickly and nursing big losses endlessly. Reverse that, and you stand a chance in this game. Reverse it, and you're thinking like the tape, not like your emotions. But tell me, how many men do you think can really reverse their nature? Not many. That's why this business is cruel. I used to believe I was smart enough to outguess the market. I thought if I just stared at the ticker long enough, I could will the price to bend my way. You ever felt that? You put your money down, and suddenly you're praying. Not trading, praying. Hoping the stock moves because you need it to. But the market doesn't care about your prayers. It punishes hope and rewards discipline. Do you see why? Now, when I say cut losses, I mean fast, merciless, without hesitation. You buy a stock, and it starts to sag, not rise. That's all you need to know. Something's wrong. Maybe the whole market is weak. Maybe the stock isn't ready. Maybe you misread the chart. Whatever it is, the only cure is to get out. A small loss today won't hurt you, but a big loss tomorrow can cripple your account, and worse, your confidence. Ever had a loss so heavy it paralyzed you, where you couldn't even place the next trade because the wound was still bleeding? That's the danger of failing to cut. And when I say, let profits run, I mean you must fight every instinct that screams for you to grab that money. The ordinary man wants to take a profit as soon as it shows up. He sees a few points in his favor, and he snatches them like a beggar grabbing crumbs. But crumbs never made a fortune. The real moves, the ones that matter, can last weeks, months, even longer. If you're right, the market will reward you beyond your imagination, if only you have the patience to sit. But let me ask you, are you patient enough to sit still when the whole world is shouting at you to sell? Charts will show you the way. Not tips, not rumors, not some broker's chatter. The tape writes the truth in black and white. If a stock breaks out of a base, moving on volume, that's strength. If it holds its gains through pullbacks, that's character. And when you see that, you mustn't be content with pennies. You must sit for dollars. How else will you ever build wealth in this game? Most people come into the market looking for action. They want excitement, the thrill of the gamble. But action costs money. Discipline makes money. Are you here to gamble, or are you here to build a fortune? Because the two roads do not lead to the same place. Let me tell you what I learned in my early bucket shop days. Back then I was just a boy with a sharp eye for numbers. I noticed patterns in the way prices moved. I could tell when a stock was about to shift direction, just by reading the tape. I'd make a quick bet, take my profit, and move on. It worked for a while. But when I stepped into the real market, I learned a harder lesson. The big money wasn't in catching every little fluctuation. It was in catching the big swing and holding it. That's where let profits run became a law, not a suggestion. I remember a time I bought a stock that looked strong as a bull. It went up a few points, and I felt like a king. Then it dipped, and I panicked. I sold for a small gain, proud of myself for being safe. But the next day, the stock kept climbing, and the day after that. Before long, it doubled, then tripled, while I was out of the game with a measly profit. Do you know what hurt worse than a loss? Watching a missed fortune run away without me. That's when I vowed, Never again would I be satisfied with crumbs when the loaf was on the table. But here's the paradox: holding a winner is harder than cutting a loser. Think about that. Cutting a loser only takes courage once. Holding a winner takes courage every day, because every tick against you feels like it's stealing your profit. Every newspaper headline, every whisper in the crowd tries to shake you out. Do you have the steel to ignore them? When I look at a chart, I don't see just numbers. I see a crowd of men, their hopes and fears printed on the tape. When a stock breaks to new highs on strong volume, it means the crowd is buying and buying hard. That's a tide you want to ride. But tides don't turn just because you've made enough to satisfy yourself. They turn when the market decides. The hardest thing in trading is to let the market, not your nerves, tell you when the move is done. Ever closed a trade too soon, only to watch it double without you? That's nerves, not trading. And when the time comes to sell, the chart will tell you. You'll see weakness, lower highs, fading volume, failure to rally. That's when you take your profit, not because you feel like it, but because the tape says so. Discipline, not desire, is your weapon. Money management is another thing tied to this law. You can't let one loss destroy you. You size your trades so that even if you're wrong 3 times in a row, you're still in the game. That way, when the big winner comes along, you're alive to catch it. Cutting losses keeps you in business. Letting profits run pays for the business. Together, they are the foundation. But let me ask, how many traders do you know who live by that foundation? Most ignore it, don't they? And where are they now? Wealth in trading doesn't come from one lucky break. It comes from consistency, following the same rules day after day, trade after trade, no matter what your emotions say. Emotions will trick you every time. They'll tell you to hold the loser a little longer, because it'll come back. They'll whisper that a profit today is better than a bigger one tomorrow. But emotions don't pay. The tape pays, and the tape pays only the disciplined. When I was making my fortune, people thought I had some secret. But there was no secret, just this law. I cut my losses quick, without mercy. I let my winners run until the market itself threw me out. That's all. It sounds simple, doesn't it? Yet, if it's so simple, why don't more men do it? Why do they keep falling into the same trap of grabbing small gains and hugging big losses? Because human nature never changes. A man hates to admit he's wrong. Cutting a loss is admitting you were wrong, and most men would rather be broke than wrong. Am I right? But the market doesn't reward your pride. It punishes it. And the man who refuses to cut his loss is the man who won't last. I've seen traders hold on to losing stocks for years, waiting for them to come back. But a stock doesn't know you own it. It doesn't care about your cost basis. It goes where it goes. You can tie your fortune to it if you like, but that's not trading, that's wishful thinking. And wishful thinking is poison in this business. When you hold on to losers, you tie up capital that could be working for you in winners. Think about it, every dollar stuck in a dead stock is a dollar you can't use to ride a strong one. Isn't that a double loss? You lose not only the money in the bad stock, but also the opportunity in the good one. Cutting losses isn't just about defense, it's about freeing your capital for offense. And when you let profits run, you do more than grow your account. You grow your confidence. You prove to yourself that you can sit through the noise, that you can trust the chart, that you can stand apart from the crowd. That confidence is worth more than the money, because it makes you a stronger trader with every win. Tell me, what's the use of making a few dollars if you lose your nerve every time? The greatest fortunes in Wall Street were never made by men who scalped pennies. They were made by men who had the vision and the nerve to hold on through entire moves. The great swings, the bull markets, the bear markets, those are the waves you ride to wealth. And you can't ride them if you're always jumping off at the first bump. Can you imagine a sailor who abandons ship every time the sea gets rough? Would he ever reach port? I'll tell you straight, there's no way around this rule. If you can't cut your losses, you'll bleed to death. If you can't let profits run, you'll starve on scraps. The market is merciless, but it's also fair. It gives the same law to every man. And only the men who obey survive. Do you think you're the exception? Losses are tuition to the market, small fees keep you in the game, big ones take you out. That single line holds more truth than all the market chatter and predictions you'll ever hear. Every trader who has lasted long enough in this business has paid that tuition. You can't avoid it. You can't bargain with it. The only choice you have is whether you'll pay a small sum and keep learning, or whether you'll be reckless and pay so much that you're forced to quit. Think about it. When you step into any other profession, don't you invest in education, training, practice, and tools? Why should trading be any different? The market is the greatest school in the world, but it charges tuition in losses, and it charges without mercy. When I first started, I didn't understand this. I hated to lose. I took every losing trade as an insult, as if the market had called me a fool. But the market wasn't insulting me. It was teaching me. The problem was that I didn't want to be taught. I wanted to be right. Have you ever felt that? That burning need to prove your opinion correct, even as your account balance proves you wrong. That is pride talking, and pride is the most expensive tuition of all. Small losses are not enemies. They are the cost of staying in the arena. When you put on a trade, you are making a bet, and not every bet will win. In fact, many will lose. But as long as those losses are cut short, they are survivable. They are no different from a business expense, like rent or salaries. If a store owner spends money on rent, does he curse the landlord? No, he accepts it as the cost of doing business. The trader must learn to treat small losses the same way. They are the rent you pay to the market for the chance to profit. But how many traders treat them that way? Most see them as personal failures, and so they hold on, hoping the market will reverse and let them escape without pain. Do you know what happens then? The small rent turns into a crushing debt. There's a saying I've always believed: you don't lose because you're wrong, you lose because you stay wrong. A wrong trade cut quickly is just a scratch. A wrong trade held too long becomes a wound that festers. One scratch won't end your career, but a festering wound will cripple you. The reason small losses are tuition is because they teach you how to recognize when you're wrong. They remind you that you're not here to be right, you're here to survive and profit. The man who thinks he must be right every time is doomed. The man who knows he will be wrong often, but wrong small, has a chance. Which one are you? Big losses take you out, and not just financially. They take you out mentally. You can recover money faster than you can recover confidence. After a heavy blow, most traders lose their nerve. They hesitate on good trades, or they overtrade trying to win it back, or they abandon their rules in desperation. Have you ever seen a trader chasing his loss like a gambler doubling down at the table? That's the road to ruin. The only cure is never letting the loss get big in the first place. Small losses are painful, yes, but they don't scar you. Big ones leave marks you never forget. I remember one trade early in my career where I thought I was smarter than the tape. The stock dipped against me, and every instinct told me to cut it. But I refused. I told myself it would come back. I convinced myself I was right. Days turned into weeks, and the loss grew until it was so large that I couldn't bear to sell. Do you know what happened? The stock kept falling until I was forced out, not by discipline, but by desperation. That loss wasn't just money, it shook me to the core. It was a lesson that never left me. Cut the loss when it's small, or it will cut you when it's large. Think about the mathematics of it. If you lose 10%, you need 11% to get back to even. Lose 50% and you need 100% just to break even. The deeper the hole, the harder it is to climb out. That's why small losses are manageable, while big ones bury you. The market doesn't care about fairness. It doesn't care that you worked hard for your money. If you give it the chance, it will take everything. The only protection you have is discipline, the discipline to cut when you're wrong, to pay the tuition, and move on to the next lesson. The curious thing is that once you accept small losses as normal, they stop hurting. They become routine, like a doctor washing his hands before surgery. You place a trade, you set your stop, and if the market says you're wrong, you step aside. No drama, no pleading, just another day at the office. and that calm acceptance keeps you in the game. The man who cannot accept small losses will never last long enough to catch the big profits. Isn't that the truth? Look at the great traders who came before us. None of them avoided losses. Every one of them lost money, sometimes frequently. The difference is, they refused to let a small loss become a disaster. They learned, adjusted, and pressed on. That's why I say small losses are tuition. Each one is a lesson in humility, in risk control, in patience. You learn what not to do as much as what to do. And sometimes, learning what not to do is the more valuable education. There's another side to this too. When you treat small losses as tuition, you free yourself from the fear of being wrong. Fear is what makes traders freeze. Fear is what makes them hold losers until they grow monstrous. But if you truly accept that losses are part of the process, what's left to fear? You stop worrying about being wrong and start focusing on being disciplined. And discipline, not prediction, is what builds accounts. Do you see how powerful that shift is? I've always said the market is never wrong, but opinions often are. Your opinion may feel brilliant, your reasoning may sound airtight, but if the market disagrees, you will pay. That payment is your tuition. The quicker you pay, the cheaper it is. Refuse to pay, and the debt grows with interest. And the market is a ruthless collector. It will take every last cent if you let it. What happens when a trader finally learns this lesson? He stops tying his identity to each trade. He no longer feels the need to be right all the time. He stops chasing the thrill of the win and starts chasing the discipline of survival. He sees each small loss not as a defeat, but as the cost of doing business. And because he keeps those costs low, he lives to catch the rare trades that make the whole game worthwhile. Isn't that the kind of trader you want to be? The market doesn't care about your dreams, your hopes, or your ego. It only respects discipline. Cutting losses is the first act of discipline. Accept them, even welcome them, because they prove you have the strength to follow the rule that keeps you alive. They prove you're willing to learn. And as long as you're willing to learn, you're still in the greatest classroom in the world, the market itself. Cutting losers frees capital to ride stronger trades. That principle is as hard as iron, and yet most traders break it every day. They chain their money to weak positions and then wonder why they never have enough to buy strength. They forget that every dollar is a soldier, and if you send your soldiers into a hopeless battle, they can't be fighting in the winning campaign. Have you ever found yourself sitting on a losing stock, telling yourself it'll come back, while at the same time watching another stock run away without you? That's the price of failing to free your capital. When I say cutting losers frees capital, I don't just mean money, I mean opportunity. In the market, money and opportunity are the same thing. If your capital is tied up in a stock that refuses to move, or worse, one that drifts lower day after day, you're paralyzed. You can't take the next setup. You can't move with the market's strength. You become a prisoner of your own bad trade. Does that sound like trading to you? Or does it sound like waiting for a pardon that may never come? I learned early that the market doesn't reward loyalty. A stock isn't your friend, and it doesn't care that you've been holding it for weeks, months, or even years. It doesn't owe you a reversal, and it doesn't owe you a profit. Yet most traders behave as if their stocks have obligations to them. They hold losers, waiting for them to turn around, because they can't stand the thought of taking the loss. Meanwhile, stronger opportunities pass them by, and their capital rots away in dead ground. What sense does that make? Capital is like water, it must flow to where it can do the most good. If you dam it up in a stagnant pool, it breeds nothing but decay. But if you release it and let it run toward fertile ground, it brings life, growth, and abundance. That's how your money should work in the market. The moment you realize a position is a loser, you cut it, and you redirect that money into strength. You don't cling to the dead, you move on to the living. Isn't that how fortunes are built, by riding vitality, not dead weight? Consider this: every market has leaders and laggards. The leaders are the stocks making new highs, breaking out on volume, showing power. The laggards are the ones stuck in ranges, sliding lower, showing weakness. If your capital is stuck in laggards, you're missing the leaders. And the leaders are where the big money is made. Cutting losers is not just about avoiding pain, it's about seizing opportunity. You cannot do both at the same time. You can't hold deadwood and climb on the rocket ship. You must choose. And the only way to choose correctly is to cut. I remember times when I sat stubbornly in a stock that wouldn't move. I'd watch it sag, hoping, praying, waiting for life. And then, on the same tape, another stock would come alive, running straight out of a base. But I had no money to take it. I was chained to my dead position. By the time I finally gave up, the leader had already doubled, and I was left with nothing but regret. That regret was more bitter than the loss itself. That was when I swore I would never again let dead money keep me from the living trade. Have you ever felt that sting, the sting of missing the obvious winner because you refused to let go of the obvious loser? There's a mental trap in this too. When your money is tied up in a loser, you're constantly watching it, hoping for a miracle. It eats your attention, your energy, your focus. Meanwhile, you're blind to the real opportunities flashing across the tape. It's not just your money that's trapped, it's your mind. And the longer you sit, the deeper the trap becomes. That's why cutting losers is an act of liberation. It frees not only your capital, but also your attention, so you can focus on strength. Isn't trading about clarity of mind as much as clarity of chart? Strong trades have a way of rewarding the capital that joins them. Weak trades have a way of punishing the capital that clings to them. This is the law of the market. Money flows to strength. The great operators, the big players, they don't waste time nursing weak positions. They redeploy constantly, always pushing capital toward what's moving, what's alive. That's how they stay ahead. And yet, the small trader, the amateur, will hold a dead stock for months, even years, while wondering why his account never grows. Isn't that the very definition of misplaced loyalty? Think about the power of compounding. $1 tied up in a loser earns nothing, but $1 put into a strong trend can double, triple, even more if you let it ride. The difference over time is enormous. One trader sits with dead money and stagnates, while another trader cuts the dead and rides the living, and he compounds his way to fortune. The gap grows wider every year, until the first man wonders how the second man became rich while he remained stuck. The answer is simple: capital allocation. One freed his soldiers. The other left them to die in a lost battle. Which man are you? The act of cutting losers also strengthens your discipline. Every time you make that cut, you remind yourself, my capital is too valuable to waste. You affirm that you are in charge, not your emotions. You prove that you have the nerve to act when others hesitate, and each time you redeploy into strength, you increase the odds that your money is working where the real gains are being made. Isn't that the job of a trader, to keep his money working, not sitting? Some men say they can't cut their losers because they don't want to lock in the loss. But the loss is already there. It exists the moment the price moves against you. By refusing to cut, you don't erase the loss, you only risk making it larger. And while you're holding, your money is locked away, unavailable for better trades. It's like leaving your best tools rusting in the shed while you work with broken ones. Would any craftsman do that? Then why do traders do it with their capital? Capital must be treated with respect. It is your inventory, your lifeblood, your only weapon in the market. To waste it on weak trades is an insult to yourself. To free it from losers and place it in strength is an act of wisdom. The great truth is this: it isn't enough to avoid losing, you must actively pursue winning. And you can't pursue winning if your capital is tied down in losses. I once heard a man say, "But what if I sell and then the stock comes back?" My answer was simple: so what? If it comes back, you can always buy again. Nothing prevents you from re-entering a trade that proves itself later. But if you refuse to cut, and the stock never comes back, you've chained yourself to a sinking ship. Isn't it better to step off early, even if you must pay a small fare, than to go down with the wreck? Every time you cut a loser, you create flexibility. Flexibility is life in trading. It allows you to pivot when the market pivots, to move with the tide instead of against it. It gives you options, and options are everything. A trader without capital has no options. A trader with free capital can seize any opportunity that appears. That's why I say cutting losers frees capital to ride stronger trades. Because in the end, the strongest trades are the only ones that matter. Survival in markets is defense first, growth follows from offense. That rule has saved more men from ruin than any chart pattern or clever system ever could. The ordinary trader believes his job is to find the big winning trade, the home run, the single stroke of luck that will change his fortune. But the truth is simpler and far less glamorous. Your first job in this business is not to get rich, it is to stay alive. Without survival, there can be no growth. Without defense, there can be no offense. How many traders do you know who learned that lesson only after they'd blown their account to pieces? The market is like an ocean. You can't sail across it if you don't know how to weather the storms. Defense is your ship's hull. It keeps you afloat when the waves crash. Offense is your sail. It carries you forward when the wind is right. But what good is a sail if your hull is cracked? You'll sink before you ever catch the breeze. Do you see the point? A trader who neglects defense will never live long enough to enjoy offense. Defense in trading means strict risk management. It means cutting losses before they grow, sizing your positions so no single trade can cripple you, and resisting the temptation to bet the farm. It means knowing that the market will always be there tomorrow, but you might not if you gamble recklessly today. Offense, by contrast, means letting profits run, pressing your advantage when you're in sync with the trend, pyramiding into strength, and riding the big moves that pay for all the little scratches. But you cannot press if you haven't preserved. You cannot attack if you have nothing left to attack with. Isn't that obvious, yet so often ignored? I've seen men with brilliant minds destroyed because they never learned defense. They could read a chart like a book. They could sense the crowd's mood before anyone else, but they refused to protect their capital. They'd hold losers too long, double down on mistakes, or risk too much on one idea. And when the market turned against them, as it always does, they were wiped out. Meanwhile, lesser men who understood defense, men with no special genius, but with discipline, survived. And because they survived, they prospered. Which would you rather be, the genius who flames out or the survivor who grows steadily richer? Survival is not glamorous. Nobody brags about the trades they cut quickly for a small loss. Nobody writes headlines about the man who stayed flat for a month while waiting for the right setup, but that's the uncelebrated work of defense. It's the quiet discipline that keeps you in the game. Offense, the big wins, the spectacular profits, that's what draws the crowd's attention. But offense is built on the foundation of defense. The man who survives long enough will eventually encounter the right conditions for offense. The bull market will come, the tape will align, the leaders will break out, and if he's preserved his capital through defense, he'll be ready to strike. Isn't that the way wealth is really built in this game? Quiet survival followed by bold action at the right moment. Think about a boxer. He doesn't just throw punches non-stop, hoping to land a knockout. He spends most of his time protecting himself, conserving energy, waiting for the opening. His defense keeps him alive through the rounds, and when the opening appears, he unleashes his offense. Trading is the same. If you attack constantly, without guarding yourself, you'll be finished by the first counterpunch. Defense buys you time. Offense rewards you when the time is right. That balance is the heart of survival and growth. Many traders confuse movement with progress. They feel that if they're not always in the market, they're missing out. So they force trades, they take marginal setups, they chase noise. That's offense without defense, wild swinging in the dark. The disciplined trader knows better. He knows that staying on the sidelines when conditions are poor is part of defense. He knows that preserving his capital during uncertain markets is as valuable as making money in favorable markets. He understands that sometimes the smartest move is no move at all. Do you have the patience for that kind of defense? Capital preservation is more than avoiding losses. It is about protecting your ability to act when the right opportunity comes. Every dollar lost unnecessarily is a soldier you won't have when the real battle begins. If you waste your capital on poor trades, you may not have the strength left to ride the big trend when it finally appears. And that's the tragedy, missing the once-in-a-year opportunity because you were crippled by a dozen foolish losses. Defense keeps your army intact. Offense is how you march to victory. But without the army, offense is impossible. Emotional survival is just as important as financial survival. A trader who suffers a devastating loss often loses more than money. He loses confidence, discipline, and clarity. He hesitates, he second-guesses, he either freezes or he overcompensates. That's why big losses are so dangerous. They destroy the very mindset you need to trade well. Small, controlled losses, on the other hand, don't shake you. They're part of the plan. They allow you to remain steady, calm, and prepared. Defense of your mind is just as vital as defense of your money. How long can a shaken man keep trading effectively? Not long. Growth, the offensive side of trading, only happens after defense has done its job. When you're safe, when your capital is intact, when your mind is calm, then you can press your advantage. Then you can let profits run, add to winning positions, and ride the big waves. Offense without defense is reckless gambling. Defense without offense is stagnation.